Yo, good morning, everybody. Can start a little bit earlier. Let me know in the chat if you guys can hear me okay. Those of you that are here. Should be interesting. It's not going to be as long as normally. Well, maybe it will be. But I got a lot of stuff to do the next couple weeks. So I got to be out of here pretty early. Good morning, Chawezi. I'm assuming it's probably your first time here. Sulphonic. But welcome. So yeah, for those of you that do know, these Sunday calls are generally us breaking down what we believe the market's going to do. So there's a lot that goes into that. We're generally pretty accurate, I'd like to say, right? Students that have been here for a while, like some of you in the chat already, I've seen this pretty clearly. So it's going to be a fun session. Be ready to maybe note questions. I'm more than happy to answer questions. That's part of why I'm getting started even earlier instead of just doing like a pre-recorded video. Even though I'm pretty busy the next couple weeks on Sundays, I still want to be able to give you guys that opportunity to ask questions. And those of you in my private group, not much is going to change. It's going to be the same. We're live every day. That's not going to be affected. So yeah, but good morning nonetheless. We have a lot of interesting stuff happening. So first and foremost, we always start with the news. So we got CPI next week. Oh, CPI and NFP. That's interesting. And the time is reversed. Normally CPI is on Wednesday, not Friday. NFP is normally on Friday. NFP Friday, right? That's going to be interesting. But when we see this, right, when it's NFP, FOMC, rate cuts or rate announcements, Fed speeches, anything along the lines of those news events, by default, at least in this community and, the things that I encourage you to do as part of this community, generally we lower our risk in terms of what the process is with our risk management, how we manage it during times like this. So I do encourage you guys to, if you say you trade 1% on your trades, I encourage you to drop it, right? Like drop it by at least 1/4%, preferably 0.5%, and give yourself, as always, 1 to 2 trades. Do not push any harder. There's no reason for it to happen. When we get into the charts, you're going to see some of the things that are red flags for the condition. You guys have probably seen the huge bounce, right, in the indices, a pretty massive recovery from that liquidation event. So again, we're in pretty crazy times right now. So it's not a time to try to get rich in a day. It's not a time to rush yourself. It's not a time to just trade anything and everything. It's a time to be cautious and preserve capital and follow a strict process without, bending the rules too much. The rules that we talk about here, especially for those of you that may have been with me for a while, that the rules, although they are strict in many cases, especially in certain conditions, it doesn't stop us from finding opportunities. In my private group, every day we find something. Doesn't mean we trade every day, but we do find something. We're on the chart every day. There's always something to make an argument about. Okay, so just to set the stage for what the risk profile is going to be this week and how we're going to approach risk and risk management, my opinion is to cut your risk, right? Cut your risk by at least 1/4%, preferably 0.5%. And let's just see kind of what this is going to have an impact on. Those of you that, again, have been with me for a while know that the news events can be looked at as macro events, similar to how the macros on the lower time frame help us frame out when moves are going to run to liquidity or inefficiency. Well, the news events are similar to are macros in a way for the higher time frame that are similar to how the macros operate on the lower time frame as well. So that's why the news is so important. It needs institutional sponsorship for higher time frame moves to take place. Okay, so say you're looking for, let me get like a visual example. Say you're looking for a response to this order block, okay? And you want to know when the timing is going to be correct. Well, you can look at the news, see what day it's going to happen, right? And then kind of see where price is at in that moment, and just assume that it needs a news event to give these large ranges, or at least to start them to a PD array or even away from a PD array. So this response here probably had a news event as well, right? When it began, when it took that high, maybe it was midweek, because this is a weekly chart. Maybe it was midweek where it traded up above this liquidity, hit the 50%, and then the news carried it back down to some of these lower prices. Same thing with this, right? When it trades into this PD array, there could be a news event that's needed for it to do so. But then when it trades away from it, again, it needs a news event. You know, sometimes it moves without a news event, but this is a very trackable way of understanding when the responses are going to take place to a PD array or away from a PD array. Okay, so that's, again, it just highlights the importance of the news, because you need institutional sponsorship for these big moves to move, right? They don't just move just because, right? They need something behind them. Otherwise, it's going to do a lot of sideways movement, you know, and it may not be too exciting. That's why when there's no news, again, you cut your risk. We can kind of see how there's today and tomorrow, there's no news happening, right? So, you know, another thing we always look at when we look at the news schedule is we think of each week from the realm of power 3. So Sunday, Monday generally is accumulation, manipulation. Tuesday, Wednesday sometimes bleeds into Thursday, but for the most part, Tuesday and Wednesday, that is the lion's portion, or the chunky middle portion of the weekly candles expansion, right? And then if a liquidity pool is taken on that higher time frame, or a PD array, which is things like order blocks, fair value gaps, so on and so forth. Highs and lows are also PD arrays. But if one of those things comes off of like an expansion on Tuesday, Wednesday, and we hit one of those things going into Thursday or Friday, that's when you can see what ICT calls TGIF, especially if there's a news event that takes place and the days before, Thursday and Friday, expanded to those levels, right? To like a higher time frame order block, higher time frame fair value gap. The news event on this day could potentially go against whatever took place early in the week, up to Wednesday, right? So that's how we map out the weekly range before we even look at a chart, right? We're thinking about these things. We're setting the table, right, for expectation, because power 3 is on every time frame. Power 3 is one of the most important key elements. Anyone that's new needs to focus on power 3. I have a list of things that I've shared with both my private group and you guys that are here and on the in the free group. A list of things that I feel are paramount, and a list of things that basically every good ICT trader that's profitable or knows what they're talking about, they use those things on that list in one way or another. Right? There's no getting away from power 3. There's no way to get away from market maker models. There's no way to get away from understanding what liquidity pools are the most important, which, the list I give you guys every week, we call it the liquidity mapping. And, after you spend some time here, you see how some of the stuff is talked about. You see it unfold real time. You start to see why these things are so important and why they're such a key focus that I have you guys paying attention to, okay? So again, just to reiterate, the news events act like macros, similar to the ones on the lower time frame with the last 10 minutes, first 10 minutes of every hour, how around those times you see volatility towards a liquidity pool or a fair value gap, right, inefficiency. The same thing happens here, but in the realm of the higher time frame. Okay, for like the weekly, for the daily, for the monthly perspective, even the monthly range also has power 3. The first week of the month is accumulation manipulation. Second and third week is the expansion, and then the last week ends up being something like this, right? It's the wick. So the upper portion is like this upper portion here for this weekly candle. You could look at it as the accumulation manipulation from Sunday, Monday. Sometimes it bleeds into Tuesday as well before it tips. Then Tuesday, Wednesday, you can basically plot as the middle portion, right? And then towards the end of the week, right, the last 2 days, Thursday and Friday, or similar to the last portion of the weeks, right, from the monthly perspective. If we go to the monthly candle, right, the first week, the middle 2 weeks, and then the last week of a month, right? And again, it's similar to how we look at the weekly range, right, from Sunday to Friday. And it's the same things are seen on the daily candles as well. Like Asia and London creates the wicks generally, and a lot of times the high of the day. Then the latter portions of London session going into New York session, AM and PM session, gives you the expansion, and then towards the last couple hours, like the last session, right, like the end of PM session, it generally creates the wick of the daily candle. So you can see how power 3 is used on every time frame. You can use it to allow clarity when it comes to price navigation, and it's just important across the board. So again, it's the same thing with all those other things on that list. Let me actually pull that up for those that may not have seen it. Some of the main goals, main topic objectives that I want everyone to become proficient at. If I could find it. Where did it go? Okay, right there. Okay. So the key topics for me, right, and the things that I teach my private group students all the time, especially when they're just getting started, these are things that you want to have an answer to, right? You want to be able to say that you've back tested them, and you want to say that you want to get to a point where you understand these things, because it's super, super important. Okay, these are like key pillars in my own personal trading. They're solely responsible for the trader I am today. I talk about each of these things in great detail. Okay, every single one of these we've talked about in one way or another. Bias and narrative we do every Sunday, right? We're going to get into that in a little bit. And all these other things, again, it's just something that you want to make a section for in your journal, so then you can have that to refer to. And anytime you learn something, maybe I mention it or you hear someone else mention something along the lines of those topics, you can put those resources in an organized way into the proper sections. So you can always refer back to it. Taking very good notes, being very organized, it's underrated, because the worst thing you can do when you're first getting started, either with a specific topic or just trading in general, is to be extremely unorganized, couple everything into one section that you can't sift through very quickly to refer back to things. That is a mistake I made in the first year. After I realized this, I had to keep it all organized. So if that hasn't been something that you've been focused on, I encourage you to focus on it. But yeah, so again, hopefully the news perspective makes sense, right? And, we want to see what the reactions are going to be like, given the fact that there's CPI and NFP. It's going to be very volatile. We still have a lot of geopolitical chaos unfolding. So again, just more reason to manage your risk properly. You want to survive. People can get rich in these types of environments if you know what you're talking about, right? If you know what you're doing and you don't do the rookie mistakes by over trading and over leveraging and just swinging at the fences, right? Swinging for the fences. You don't want to do that, right? In this community, you learn what good opportunities look like. My private group, they see it every day. But you guys get a lot here on YouTube. And, there's a lot of you guys that just follow me on YouTube. And you guys are, you've been doing very well over the last year of following me since I've been, way more public than I used to be. Okay, so just give yourself some grace, be patient, and take good notes, right? So yeah, hopefully the news schedule makes sense, right? Sunday, Monday, if you do look to trades, I never trade on Sunday. If you must trade on Monday, just know that you're in, low probability because there's no news. When there's no news, you automatically classify the day as low probability. Does that mean that opportunities won't show up? Of course not. There's always something to do. But it just calibrates your risk profile with the realities of the market and what could be presented, which, on a day with no news can be a little hectic. Okay. On top of that, we have our NFP protocol, which again, you lower your risk, don't overtrade, and just, swing at things that you can't make an argument for the other side about, right? Like if you're bullish, only swing at things that make sense for bullishness. Okay, don't be reckless trying to do both sides. I teach how to do that. I do that publicly. I share it all the time, but it requires a lot of work, a lot of understanding, a lot of experience, and a process, right? And you guys know there's a process for everything. Let me see. Trady said, have to go early, but we'll watch on. Okay, yeah, no worries, brother. Let me know if you have any questions later, okay? But have a good rest of your day. So yeah, hopefully that makes sense, right, with the news perspective. Of course, we'll dive into the markets, but first I want to pull up another prerequisite that we do. Let me pull up the seasonal influence just to remind you guys of what to kind of expect, right? So we'll actually use ICT's resource just to keep it simple. Okay. So you don't just take this and assume that this is what's going to happen every time. This is something that you refer to every month. This is for the Dow, right? Everything is correlated pretty much for the indices, so you could pick one and do a study on one, and generally that'll be the case for the others as well. But generally, over the last 30 years or plus, this seasonal influence analysis has showed, and it also shows if you go back and back test these things on your own, you'll see these things unfolding. But it shows it's bearish generally going into January, which we do see that did take place, right? You see that it opened up and just rapidly was bearish. So that seasonal influence is clearly seen. There's power 3 as well for like the yearly range, right? So and you break it down into quarters and you look at it in a similar way to the weekly perspective that I shared for the monthly power 3, right? You take each week and first week is accumulation manipulation, second and third week generally expansion, and then the fourth week is counter trend generally because it needs to present the wick for the monthly candle. Same thing happens for the quarterly, the different quarters in a yearly range. Power 3 is unfolding in those as well. Okay, it's the same principle as the weekly, the different weeks, right, within a month for the monthly power 3, but you just look at this on a 3-month basis because there's 4 quarters in a year, okay, and there's 3, sometimes 4 months within a quarter. You could just keep it at 3. Sometimes there's a fourth, right? Kind of bleeds into it essentially, but you could just keep it as a 3-month basis. So, if you think of power 3, right? Like in this instance, right? These lines are the quarters, okay? These green lines. So the first quarter, second quarter, third quarter, fourth quarter, okay? And then it goes, then it restarts, right? The first quarter starts in December for the next year. So if you think of power 3, right, look what happened, right? Price opened up here, if you were to, look at the chart over here, you see that it declined, getting below this level, right? If you were just to continue this, because this is December going into January on this side. Okay, so you could see the decline, and then it starts to pick up a little bit, but it's below the open price. So the first quarter gets us below the open price, consolidation, manipulation. And then we got the second quarter, expansion. Then we go into the third quarter, which is the summer months. So sometimes it's not that favorable. And then you get the fourth quarter that accelerates, but many times the Christmas rally is also presenting us with a reversal, right? After an expansion. Christmas rally is real, so it does expand, but to close the year, right, to create that yearly wick, a lot of times it will turn around. It's not perfect like this every time. It looks a little bit different, just like how Power 3 and each daily candle looks a little bit different. Each weekly candle looks different. It's never picture perfect, but the components and the logic that's used, how the open prices are used, how each moment in time is used, right? Each quarter, right? It's important to keep this noted down. And as you study Power 3, going from one time frame to another a study of Power 3 on another time frame, and then a higher time frame again, all the way back down to the lower time frame studies, this stuff just unfolds relative to whatever time frame you're looking at, right? It's just the way it is. That's why Power 3 is so important. That's why we talk about it first and foremost every Sunday. We talk about it, every day, right, in my private group, because it's unfolding and it has to be tracked because it helps you with price navigation. Okay, so again, you could screenshot this and use this as a reference every year, right? Every month. But make sure that you don't just take this at face value. You go in there and prove it to yourself. Because how are you going to trust this just because I'm saying it? Because at some point you'll see that, okay, it says bullish in February, but it's bearish because maybe the market's overall bearish. It's going to throw you off. It's not a be-all, end-all, but it's something that is very common, and you could prove it to yourself that this is common, and kind of like a treasure map, like a prediction tool, by going in and back testing it on your own and seeing, when the lows form, right? Identifying the lows here, right? The low here, the high here. When does it form, right? What part of the year are these highs and lows forming, right? And then you go into previous data, and then you'll see how common it is, okay? You'll prove it to yourself. I'm just here to signal it, and your own personal studies with anything that I talk about, right? You have to go in and vet it, right? Don't just take my words at face value. Just like how ICT says, don't take his words at face value. I encourage you to do the same with anybody that you watch, because it's necessary in an environment where there's so many people that aren't being truthful because they just want to build an image or whatever, and their intentions are not a lot of times to really make you good. They're to keep you attached to them, right? So then, you can subscribe to them and all this other stuff, right? So yeah. I just wanted to make sure I mentioned that. So again, it says February is, more or less a bullish type of environment. We can see how that's kind of already began. So bearish January, bullish February. Well, we ended the month in January, right? Running above these highs, and it began the decline, right? And then February came in. Generally, it's bullish, but the start of the month, right? If you get the open price of February, you think of Power 3 from the monthly perspective, doesn't really shake things up too much if they just manipulate below. Because remember, Power 3, we're worried about what happens towards the end of the month, right? What it evolves into, right? And historically, what can assist us in that prediction. So we'll see, right? We'll see what happens in this. And then, of course, every month we'll refer to seasonality just to keep you up to date. I have a constant live tracking of evolving seasonal influences, but most of the time, because it's such a large amount of data, things don't really change. So, like that little reference that I gave you was from a long time ago. And honestly, nothing has really changed. It's all pretty much the same year to year. with some nuances because of geopolitics and things that happen, just global economies and all that. Depending on what's happening, it can be affected in terms of the precision that's delivered through seasonality. But if you're able to find seasonality in play, say you're bullish, and the seasonal influence clearly shows that there's bullishness, right? Or we're coming off a low that's also seen at the same time or very close to the same time in the seasonal chart. And you can make an argument like, say, this order block here is being shifted with a bullish seasonal influence. If it trades into that order block and then breaks another up candle or another down candle, that's a heavy confluence that price is now in line with the seasonal influence, right? And if it fails, because maybe it's bearish, right, overall, but the seasonality is bullish, that's telling you something, right? It's telling you that the bullish seasonal influence is weak, and we're in a very, very heavy market. So whether it follows seasonality or is going against seasonality, you can still use it as an important tool to help justify something, even if it's not fully in line with the seasonal influence. Because like if we're in a bearish market and we're going into a bullish seasonal influence, generally, if the market's truly bearish, the seasonal influences that are bullish can tell you when you can expect, or when you could reasonably expect, retracements to unfold before it continues to drop off, right? And of course, that happens a lot of times when geopolitics is wild, which we're in that environment right now, okay? So I'll keep you guys updated, obviously, but yeah. So hopefully that makes sense. We've talked about seasonality before. We always do at the beginning of the months, but and the beginning of the quarters because it's important. But if we come over here to the DXY now, we can see how on this quarterly perspective, the 3-month chart, we are in fact trading into a 50% level of this wick here. So we're going to keep tabs on that. Okay. Price is closing below that, right? We came off of this quarterly fair value gap that we called before the fact. Okay. This one right here, and the order block, which is also a bearish breaker. And we see that there is a real reluctance to try to go up. We have basically turned into a consolidation, so it's kind of stuck. Makes sense with all the chaos that's unfolding around the dollar, right? The debt and all this other stuff that's taking place. So it's just kind of the environment that we have to kind of deal with at the moment. Let me actually put this here. So if you guys remember, we've been talking about this quarterly fair value gap, this one right here. We used it all year last year, right, as a really reasonable target. You can see how it's used it pretty dramatically in terms of the underlying context. It just has refused to really open up. We've been consolidated for quite a while, since May of last year. Well, I guess since June of last year, or the summer months. This is a good example of the summer month volatility. It's just a shit show at times, right? Sometimes it doesn't do anything. It just goes back and forth because it's the summer, right? People are on vacation. It's just kind of just the way it is. You know what I mean? And you see that seasonally in the chart, right? If you go back to the seasonal influence I showed you, going into the third quarter, you saw in the seasonal chart itself that over the last 20 to 30 years, the likelihood of a consolidation is generally present and pretty likely going into the summer months. Does it happen every year? No. Right? Does it mean you can't trade in a consolidation on that higher time frame? No. Right? You could still find things. We do all the time, right? We navigate any condition, right? When it's a harder condition, we just lower our risk, but nothing process-wise changes, other than our extra caution that's added, right? So we'll see what kind of happens in here with this fair value gap. It's still respecting it. I can say that if it breaks down aggressively from here, we have this low to that high. That's a breaker, right? Low, high, lower low. So price is trading into that. We did, in the last week, try to identify this little gap in here, right? That was a liquidity void, meaning that there's a void of liquidity. There's nothing there, right? It's a gap, but it's a specific gap that doesn't have any trading, buy side or sell side, not even a wick. Let me see, where's my markup? Okay. So we were watching to see how that was going to be treated. And we could see that it pretty solidly traded beyond it. Okay. I did map out that this is the range I want price to stay below. If we're going to trust that it's going to, just continue to go lower, because we're still inside of a range in here, it could very reasonably run back to equilibrium. It still hasn't fully dedicated to dropping aggressively. We are still in a downtrend, right? It's not really too exciting. We are kind of gravitating obviously lower still. We do have this order block here. 50% of that order block is here on this monthly perspective. So we can take that. So that's our 50% of the monthly order block. Okay, and that's right around here. So that's going to be significant. Okay, we got equilibrium here. Make sure we mark that. And if you guys got any questions, you could just toss them in the chat. But hopefully everything makes sense. Equilibrium. So yeah, if we could stay below these levels in here, there's a lot of lines, right? But all this is measuring the high extreme to the low extreme, getting our quadrant levels within that range. Because we've got buy side taken, sell side taken, so that's our dealing range, the parent dealing range. We do have a smaller one inside here from this high down to that low. Right, so the equilibrium is, it creates this little range in here between this range and the larger range. Let me see. You can actually put that. So again, anything above this ends up becoming a premium relative to this decline. So, how is that useful? Well, smart money likes to sell at a premium and they like to buy at a discount. So from this larger perspective, and just, another thing too, if this chart, right, was the 5-minute chart, right, because things are fractal, we could look at it in this way. But if this was the 5-minute chart, what would you be thinking? I would still be bearish, right? I would just think that, okay, we have a stop run. Now we're returning back into a fair value gap. In this case, it's also a breaker on that daily chart. Okay. And as long as we stay below this breaker, I will still be looking to see if price can go lower, at least from this weekly perspective. Once it starts violating and gets up here, these highs up here end up becoming potential targets. Okay. And if it breaks this down candle here, we're also breaking through a fair value gap. We are back above this quarterly fair value gap. And we'll also be violating that breaker, right? The breaker block that's supposed to hold if a breaker is going to be valid, right? What's a breaker, right? The low, high, lower low. If you go to the daily chart, see even more clear, right? The low, high taking out the high, and then we immediately drop down below it, right? And again, we painted this as a market maker sell model as well, right? We walked basically all this price delivery all year last year up to today. So I encourage anyone that is new that watches the replay to, you know, go check out some of those videos. Again, vet what I'm saying. You know, I say a lot of pretty large claims with the intent on having you go and tell me that I'm wrong, right? Tell me that I'm not being truthful, because it's incredible what we do here. And part of it, you know, is because we keep this simple, right? Hopefully this is simple right here. You know, I can make this extremely complicated. I could point out every PD array. I could point out everything in the chart, but I know what's important relative to the experience I've gained over the last almost 7 years, right? And in this case, right, if we start at the weekly chart, kind of, you know, take some of the noise away. Right, we also got that monthly order block too. So we got our higher time frame PD arrays that are close to price, and price is trading back into it, right? Another, you know, liquidity mapping idea that I tell you guys about every Sunday. You know, I guess I'll give you guys a reminder on it here as well. The most important liquidity when the next candle forms, no matter what higher time frame you go to, whether you're on the quarterly, the weekly, the monthly, or the daily, the most important high and low is going to be the current candle high and low. And then any high and low relative to a candle that's near to that current candle, like this low here, that's pretty far away, right? So this candle's high and low has to be violated before we get to even this wick 50% level, or anything down, you know, over here. Trading from this area down to the low of this candle, because this is a weekly chart, there's hundreds of handles that are inside that move. Just simply trying to frame price going from the upper portion of this to the lower portion, or from the lower portion to the upper portion, to simply take out the current candle's high and low when this new candle forms. Okay, like that's the easiest way to identify liquidity. And then of course, you want to find obvious equal highs and lows that make sense. This only makes sense if we lose this breaker. Because again, we have our 3 PDA rule. From this, if it's going to stay valid as a retracement to go lower, and we're going to keep this downtrend intact, we got to break 3 PD arrays to the upside on this higher time frame, right? It's a requirement. If it doesn't happen, then you may get caught up in a deep retracement like this. All right, do you notice how in this price delivery, we did not break 3 PD arrays? The final PD array was this order block, which is also a bearish breaker, right? So we got the breaker, we got the order block upper portion here, right, the midpoint. And then we also have this fair value gap. Notice how we traded right to the fair value gap, and the order block and the breaker encapsulated all in that area. And then what happened? Price immediately sold off. If you guys remember, we were looking to see, right, if that was going to get traded through, because if it would have got traded through, again, we were looking at this as a possible market maker buy model. We said that if this order block here got violated, which is an order block and a swing low, we have a breaker here too that was bullish that we talked about. But then also this wick here, I said if those get taken out, which they ended up doing, we would not be bullish anymore. And we would then look to try to target some of these lows. And then we were able to do that. Once it did this, especially when it took this low out from this candle, because then we had a change in state of delivery here, which is simply this up candle being violated, right? That took place, plus these other PD arrays got violated, and we created an up candle that then got violated again. So if you were bullish, this turned you off, at least at this point. Maybe not early, because you know maybe you don't trust things yet, like the 3 PDA rule and how we do that in terms of validation. But once it hit this low here, we were 100% confident. And if you go back to the week that I talked about this, you know, we were pretty much on point with it, right? Once it happened. So yeah, and then you can see the price, you know, sold off aggressively. Okay. So again, with all that, previous price delivery explained, hopefully understood, we're now here. So again, the only time I will be invalidating any type of sell side delivery, I don't care if this was a huge retracement. The only time I will be bearish, because I'm going off that weekly narrative, is if we break this high up here, or break the high of the upper portion of the breaker block, right? Because again, if this weekly chart perspective was a 5-minute chart, because things don't change and everything is the same from time frame to time frame, it's just a different amount of time it takes for things to unfold, and the ranges are larger. But because that's a truism in the market, we can look at this as if it was the 5-minute. What would we be thinking if this was the 5-minute chart? I would be thinking, again, that this is just a drop, took the stops, we're coming back to stop anybody out. We are consolidated, so that's something we got to keep in mind. So it may remain consolidated. But the only time I would get away from this overall bearish trend is if we were to get above this. And it's the same thing if it was the 5-minute and I saw this. I'd be thinking the same exact stuff, okay? It'd be no different. So we're now in a premium relative to this high to that low. So when price opens up, again, my most important liquidity is this high and that low. If we can see price open up and do something like this, right? Maybe it's going to let me do it. No, it's not going to let me do it, of course. If we can get something like this to unfold, I guess I'll make it bigger. If we can get something like this to unfold, where the week opens up, because this is the close, obviously there might be a gap of some kind for the new week opening gap, but we'll see what happens, right? But if we can get price to open up like this at the start of the week, rally up, remain below this break or 50% level, and then start a decline going into Tuesday, Wednesday, maybe even Thursday. We do have NFP, so maybe it pauses, right? Or consolidates for the start of the week. Maybe it requires one of the news events to push us up into this. Maybe the one on Tuesday can do it, right? Maybe that'll be the reason for the wick to form, getting us, where the hell is the chart? Maybe the wick will form off one of those news events. Because again, to trade to a PD array or away from a PD array, many times, not all the time, but many times, a news event is coupled with that reaction. But I would honestly like to see something like this, right? It may not get all the way down to here unless it has something like this, excuse me, which could happen because it's NFP, right? Like NFP, CPI in the same week. I mean, we could get something that looks like this, right? Like we could really get it to just melt, and that'd be par for the course and typical. But going into this week for the dollar, with all the things that we just discussed, it makes sense with these higher time frame PD arrays being layered on top of one another to identify this high. Maybe this high ends up being the counterparty liquidity, meaning that when price begins, before they look to decline, they're going to maybe run up, stop these people out that are above these highs with their stop losses, tag them in, and then rip the other way, because their real intention, like we've mentioned, could be continuing to be bearish. Nothing has changed. Nothing changes in this bearish instance unless it gets above this high for me, this high of this breaker. All right. You see these consecutive up candles as well, right? If we move up to the 2-week, we see that it's also an order block. So you can see how the breaker from that daily chart is also, as you go up in time frame, it's also a PD array here as well, right? It's even higher time frame PD array. even higher time frame PD array. We also have this wick in here. That's significant. Preferably, we don't even attempt to really get too deeply beyond this because it's a down wick that's huge, right? So you can start to see how we're building a narrative with this information. Of course, we look at the bonds and yields as well. I'll leave that for you guys to do. They're not really doing much, right? But I'll leave that for you guys to go do. But yeah, let me know in the chat if this stuff makes sense so far. Because that is definitely my expectation. I would like to see if we can get that to unfold. If it unfolds, it's beautiful. It's a typical thing that happens. They did this retracement. They got everyone thinking, oh, it's bottoming out. Look at the huge wick. Right? And then maybe they open up, play around a little bit. News comes out on Tuesday. We run up. Maybe we just tag this and hang around. And then CPI and NFP come out. And then we get something that just boom, falls off the face of the earth. Right? And think, this is power 3, right? First start of the week, accumulation, manipulation, targeting an opposing PD array or opposing liquidity pool to, let's say the down move. It takes that, and then another news event comes out, and then it continues to drop lower. And then by the end of the week, it'll have a wick of some kind going into Thursday or Friday, especially if we hit like the 50% here, or if it really accelerates and takes this low out by Thursday or Friday. You can almost guarantee that we're going to end up getting something that is a large wick once that happens. You can imagine there's a lot of liquidity down there. Okay. And again, this happening puts us in a beautiful equilibrium price point. We're also not only supported by this breaker, we're also supported by the 2-week bearish wick, and also the 2-week bearish order block, which is essentially this here, right? This up movement, down movement. This daily breaker is also a 2-week order block, okay? And then we also have that wick. So we got three major PD arrays resting in this area, including the quarterly fair value gap, right? Those levels are powerful. These are levels that present big ranges when you can be correct on them, which, because we live here on this time frame, on these higher time frames, the quarterly, weekly, monthly, and daily chart, that's why you guys see that although we target 20 to 30 points as a baseline minimum, because we're day traders, and I scalp, right? Our framework from the higher time frame is what keeps us as accurate as I've shown publicly, and how a lot of you guys have been continuously showing as well since you've started working with me, or just showing up with on these calls. It's very eye-opening, but this is a big major factor to our ability to be on the right side. So yeah, hopefully this whole framework makes sense. It looks a little bit busy. I have stuff that's a little bit older, just so we can have things as a reference from where we came from. We called this as it happened, and then once it took this low out, I talked about how it was going to go lower. Just go back and look at some of the videos I did. You'll see, right? All this stuff has been known. Didn't matter if it was consolidated. Doesn't matter if there's a lot of wicks. This decline from last year, right? This run up and the decline, we looked at that as a sell model, and we walked it the whole way. I called it a 1,300 point move in this because of simply us seeing this happen. You see how this opened up? Like, let's say this candle is similar to this candle here, right? This candle here is similar to where we're at now. It trades up into the fair value gap. All right, it could be a break or two, right? Takes the previous candle's high with this wick in here, and then what happens? It falls off. Because we're bearish still and nothing's changed, I wouldn't be surprised if that same phenomenon takes place. And again, if we lose this breaker candle, that's when I will then look to adjust and then try to seek some of these equal highs up here, which are very clean. So what is needed for me to think that that's the target overall, or even these are the target? We need to get above this candle here, because that violates multiple PD arrays, right? It violates this this breaker block. We also have that large wick here. And then we also have this gap. We also have this gap. We also have a stop run. So breaking that triggers my interest to target buy side again. Otherwise, I'm going to keep going bearish. And that's my main focus. I want to see how it treats this, see if we can't get something like this to unfold. And the fact that I'm able to go back and point out an example of something that I'm potentially trying to see just shows you how common this is. This happens all the time. Right? Look right here. Right? This candle. Price opened up, rallied up beyond it, took it out, and then what happened? We closed inside this gap, closed below the wick here, and so what happened? It continued to drop. We did not break this fair value gap. We didn't break this wick midpoint, and we definitely didn't break this high. That would have been where I would have changed my opinion to go bullish in that instance. Right? But for this example, moving forward, we want to watch this breaker block, see if it can hold. If it does, we want to see this high get swept and then see it go lower. That's our main objective. Contingency plan, if it goes south, right, and it doesn't choose to do that, if we get up above this, our objective will be these equal highs and these equal highs. Okay? So again, hopefully that makes sense. If you guys got questions, obviously just let me know. But yeah, hopefully that's simple enough to understand. So with that being said, I'm going to come over here to the currencies. Right, so we've had price basically turn around, right? It inverted this fair value gap. I said we had to watch that. Only way I would look to be bullish again is if it got through that and then use it as support. Otherwise, it was going to dig a little bit deeper. We have one change in state. Then we have this second change in state here. It's similar to, let me see. Where's the example that I gave earlier? It's on the daily chart. Yeah, it was here with this, right? So we had that one change in state, second change, and it kept going lower. So if we look at this, we have that same phenomenon. Change in state, another change in state. Basically confirming order flow is going to continue to dig. Because higher time frame, it's still bullish. We need to see this get taken out, right? We need our 3 PD arrays to be violated. Right? If we look at it on the weekly chart, we could clearly see that we took this liquidity out that I pointed to before the fact. Just go back and look at the replay. So once we fulfilled that, we also have the bearish seasonal influence for January. So we see that it kind of unfolded. And again, February is bullish, right? So we'll see if that continues. If it does, right, we've now declined, hit a logical level, see this fair value gap. So as long as this stays intact, as long as we don't get beyond this gap in here, right, the lower portion, we should be fine to keep seeing it go higher. There is early signs for potential, for the potential for price to turn and continue. It's just an early sign, but given the overall structure, it doesn't seem like it's fully done yet. Maybe that changes, right? Maybe we get this candle to also be traded through, right? And if that's the case, we got to keep our attention down here to these equal lows here. Otherwise, we have a high, low, higher high. So price is trading into a bullish breaker. So again, this level getting violated, this up candle being violated, not acting as support, which it should do if it's going to continue to go higher, that stuff unfolding where this doesn't hold turns us down to thinking, okay, sell side now, especially if DXY chooses to rally even more aggressively and get beyond that breaker zone in here, right, the breaker block, and maybe this doesn't unfold, right? Actually keep that on there. Then we would look to see things change, right? We'd look to see this go lower if the DXY does do that. But for now, again, DXY looks like it's still bearish. So this has the opposite effect, right? If DXY is bearish, this is generally bullish. So we've had a little flurry of bullishness in the DXY. So that's basically allowed this to dig deeper into a discount. But that may simply be all it does, right? When this candle breaches this candle and we can get up above this little area in here, which is a suspension block. It's where there's a gap like this and a gap like this, right? On both sides of a displacement. The upper portion to the lower portion, that whole thing is a gap and should be treated as such. And you want to watch how price respects that, okay? So if we can get up above this, right, we'll be back in line with the bullish narrative. We'll see we have an order block here, we have a wick, we have a volume imbalance, and again, we still have this gap in here that we got to observe. We got to see how it's going to be treated. So we'll see how things unfold. Let me move this. So we've got the quadrants of that gap. So we'll see, right? Our 3 PD arrays in this instance to let us know that we're back in line with the narrative will require us to break above this high, right? We do have this wick, we do have the volume imbalance, we do have this order block. Breaking through this high would make us 100% sure, because then we'd also have a change in state. Breaking above this high, right? And then if we can get a down candle that gets violated again, aside from these things getting, broken through, we could then look to target the buy side again up here. But we don't know if it's going to continue either consolidating and accumulating in this level, or if it's going to reject this, right? Because the higher time frame is still bullish and we are at a level that makes sense for it to bounce, and DXY still looks like it's bearish, we'll continue to see if we can get this to, attempt to get up here, and then study and watch how it's going to react at these levels when they do get traded to, right? But overall, structurally, it's still, just looking like it reached a discount, and maybe we'll look to reach for a premium, especially with a weak dollar, okay? This response, something that I always tell you guys to go study. When price takes a higher time frame level, watch the reaction. When it takes a weekly high, weekly low, previous month high and low, any of the things from that liquidity mapping higher time frame list of liquidity, whenever it fulfills something like that, you want to make sure that you're not just assuming that, okay, resistance turned to support and it's going to go higher. This is what generally happens. They dig deep into that support level, right? Or resistance turns support level. Then it hits a discount PD array, something within the realm of ICT concepts. Then it looks to go. You may be correct that it took the high, so now it's going to come back and then go, continue to the buy side. You may be correct on that. The logic and how you get to that point is different, right? It's more effective when you think of it from the realm of ICT concepts. Okay, so again, this decline may turn to a bullish move again. We got to wait and see how it's going to treat some of these PD arrays. And we have to see if DXY is in fact going to respect this and continue to go lower and not break the upper portion of this breaker, which again is the invalidation for bearishness on the DXY. Okay. So yeah, it's kind of my opinion on the currencies. So we'll see how that wick is treated in the upper portion of the suspension block. Again, I can say that if we break this low, right, and we turn that into a bearish order block, this is most likely in jeopardy. But once it fully breaks through that, or even breaks through the 50% of that on a closing basis, and we get below the suspension block, I'm very much looking to see these lows get taken, if that happens. If not, we're going to keep going higher, expect that this should fail, and if we get up above here, we'll be in a full-on market maker buy model. This will have been the sell side, and then we'll be on the buy side of the curve targeting the high up here once we take this high. Second stage distribution will be up in the upper 75% if that does take place. So expect that to take place. Once you invert this level, we should be able to get a very rapid response beyond that high, assuming that happens, right? So keep that in mind. So yeah, and then for the euro, it's very much a similar scenario. So we'll just have the same objective. Same principle. So yeah, with that being said, we will now move on to the indices. So yeah, let's start on the weekly. Let's take some of that off. Again, we are still in a pretty nasty range. It's a pretty nasty range, right? And again, if the dollar does choose to rally and it ends up breaking beyond the breaker that we've had outlined, and it does start to seek buy side or recover a bit, it's the beginning of the year, right? Power 3 unfolds at the beginning of the year as well for the yearly candle. So even if it's a bullish year, just like the prior 5 to 10 years, around this time of year, price looks to set up that manipulation phase of the yearly Power 3 from the first quarter, right? It's being used in the way that it's normally used for the Power 3 delivery, assuming that we're going to have a bearish year, right? Or a bullish year. Did I say bearish? A bullish year, right? It may drop and be bearish to start the year, and then target some of this. Look at it as counterparty liquidity, similar to this idea, us opening up, running up above the high, and then looking to tank, scooping that liquidity. It may be looking to do something like that here. We do have these equal lows. We got to make sure we're looking at that. Okay. I think I want to keep that, but let's put it to the side a little bit. So yeah, we can see clearly that this wick was respected, right? We just simply went up, hit this rejection block, also respected the midpoint of the wick here and here. Price took that high, well, kind of set equal highs. There's a lonely high here on the, I think on the daily chart. Oh, it's one of the candles, right? But that's still a high. So you got equal highs there. This was 75% of the yearly wick. You guys can see why I pointed your attention to breaking this wick down, because price trading up into it, it's been a useful tool, right? And then when price is pushed away from it, right, any of those quadrants that we've outlined for that yearly wick from last year, whether it's 25, 50, or the 75%, price has been very, very reactive to it, right? To all those different levels. Okay. You can see how it's just unfolded rapidly. We had a change in state here. Then we had another change in state. So double change in state. And then that led us to declining, which again, if you go back and review, I mentioned, right? Price did rally up. We did try to observe if this was going to be disrespected. This wick was very important. It traded into it. And then once we got down below this, I knew that we were already done. So we kept being bearish. We tried to see if this could get violated. If we closed above it, then we could look at these equal highs up here that were left. But in the moment, right, we were able to get back in line or stay in line with what was unfolding, and then just completely invalidate the fact that it was going to go higher by seeing this double change in state. Once this candle closed below that, we continued to march lower, seeking these equal lows here. Talked about that as a low resistance liquidity run. I talked about this gap real time, I think live on YouTube, and then price just went right to it. And now we've failed to break the low, but nonetheless, price is still potentially holding the bearishness. We'll see how this is going to be treated. This wick too, right? We have a suspension block actually. So we got up here down to that. I'd say that if we get beyond this suspension block, it may be done trying to go lower. And if we get DXY to drop while that takes place, that's a good sign, because then we'll have a breaker that's being supported. We'll have a suspension block inversion and a breaker here being invalidated. That breaker is here. Okay. So we've got a suspension block, we have a wick, and we have a breaker, all in one little area. So if price was to open up with this candle, remember the most important high and low is this high and this low. Before it gets up here, it needs to take this high. Before it gets down here, it's going to have to take this low, right? If it's going to target the larger weekly low down there. This as well as a weekly low. We have a weekly high up here, okay? So the current weekly low, current weekly high, that's significant. So we'll see if price does want to get beyond this stuff, right? If it gets above this, then of course we're looking at these equal highs here. And then we have the next layer of liquidity up there as well. But for now, we want to continue to observe how this is going to be treated in here. It's bearish, but we are inside of a range. It's a sideways range. And we've came basically back into that range. So how it treats this lower portion here and this breaker and this suspension block and the down wick, it's going to be significant because if we open up and do something similar to what I mentioned with the DXY, opens up, maybe shoots a wick above, but it remains displacing to the downside like this, right? And it keeps this available, like the 50% of the suspension block, 50% of the breaker. If we can't even attempt to get beyond that and it starts pushing lower again, it's a pretty telling sign that we're going to continue to go lower, right? So that's what I'm going to be trying to watch, right? We do have this as a potential order block bullish. So when price opens up, I want to see how it's going to treat that. If it does something like this, though, and can't even essentially get to the 50% of that, and then the next candle is a rapid bullish candle that gets us beyond these levels like this and shows like little respect to this breaker, little respect to this suspension block, and then maybe it does something like this too. Opens up, maybe it trades back down into some of these levels, refuses to break this order block and this potential hypothetical order block that may form. If it does this type of stuff, then you know for a fact that we're now back in line with buy-side delivery, right? We don't necessarily need this other one. We would just need this here, right? Because if it does something that respects the 50% of this order block, and it's starting to show no respect to this in terms of pushing lower, you could start to, like I said earlier, see the narrative painting itself. You're studying the reactions to each PD array and how they all form and how they're reacting to one another and how price delivery is treating them. Because this is a higher time frame, you know, it takes a little bit more of more proof, more things to be violated, or more time, I guess, not more things being violated, but more time for things to be violated and unfold. Because that's the case, sometimes people are impatient, so they miss it, right? Because they have the 5-minute mindset on the daily chart. Everything works the same, right? If this was the 5-minute chart, I'd be thinking the same exact principle. It looks like it just displaced lower. It's retracing higher. We have these levels, and they should respect and go lower with that breaker targeting these relative equal lows. It'd be the same on the 5-minute as it is here on the daily chart. Okay, but we have to see how this is going to be treated. We have this confluence here to this wick 50% level. So that is going to be important. It's a bearish daily wick. Let me see. MNQ to be bearish, which levels invalidate it? So, like I just mentioned, the invalidation for this to be bearish would have to come after we break above the suspension block, the wick here, and the breaker block here. So, just like on the DXY, we need that breaker to be invalidated to the buy side. You could see that things are kind of going together, so there's a correlation problem, right? But for me to try to see, or for me and all of us, if you're taking my opinion and applying it, we need to see this upper portion get violated. and show little to no respect to these levels in terms of going lower, right? The 50% of this, right? The breaker and this suspension block here. So these three PD arrays, they're either going to hold price and continue to support us going lower with a displacement away to the downside, or they're going to be traded through, which would then invalidate the downside, and we would then turn to a market maker buy model, right? If we get a response here that fails to get beyond this stuff and it starts to pump lower, we could then take this high to that low and start to think market maker sell model, right? And then try to target these equal lows down here. I'm going to stick with that opinion. I'm going to think that we're maybe not done potentially going lower. We still haven't, on this higher time frame, really justified that things are not going to be bearish until it gets up above here, right? It's a huge displacement. There's lots of negative news, lots of things happening in the world. We haven't quite taken out this liquidity pool. It seems pretty reasonable for it to take that out, right? If we're on the weekly chart, we are inside of a range-bound environment, so it could just continue to bang around in here and not do either one with any real follow-through. So we'll keep in mind these things. But again, given what we see at the moment, in order for me to be bullish again and turn this into a buy model and not allow us to target the lows down here, I need this high to be taken, because then we could frame out the latter portions of a buy model, justifying that buy model with multiple PD arrays that should have held bearish being invalidated, right? But for now, like I said, unless that happens, I'm going to continue to be bearish. We do have this order block. So again, we want to see when price opens up, how it treats that going into the start of the week. Because if this holds and it displaces through this stuff, that may be a pretty valid change in state. This may be a smart money reversal, setting up the buy model. And then we may have to get in line with that, right? If it takes this high out, right? This upper portion. It has really no reason to get down or get up into this order block too deeply. Because again, if you think about the PD array matrix, go pull that up for you guys real quick. See if I can find it. It's a very, very important PDF that I've had for years. Let me go show you guys. Some of you guys have probably never heard this. If you've been with me for over 2 or 3 years, we've definitely talked about this in great detail. But where the hell is it? PO identification. So if we take a look at this here, you notice that it's in a very particular order. So if you're going lower and prices retracing higher, the first thing you're observing is bearish mitigation block or a bearish breaker. You guys know that the mitigation block and the breaker are interchangeable. The breaker just has a stop run. The mitigation block has a failure swing. Their functionality and place in the order in which the algorithm seeks PD arrays, they're the same, right? So they're basically one and the same. Then there's a liquidity void where there's no liquidity. If it's present, it'll be seeked first. The last thing that gets targeted is a old high or old low. But if there's an order block deep inside of a breaker, because a breaker is a balanced price range and there is, in fact, an order in which PD arrays are seeked by the algorithm, this order specifically, if there's an order block or a fair value gap that's deep inside of a breaker, because the breaker is first in line and the mitigation block are first in line, if this is present with an order block or a fair value gap, because they're later in the order and things, right, it's most likely not going to refer to it too aggressively. So that is why when you see something like this happen, and maybe you don't worry about the breakers, but you see price retrace and it's very shallow and it doesn't hit the order block or a fair value gap that you were looking at that's well in a premium, because remember, you want to sell in a premium. But when the things are present like this and the breaker is in line, while these other ones are present as well, it's going to be less likely to refer to the fair value gap in the order block that's deep inside the breaker or the mitigation block. This is something that nobody talks about except ICT. But anyone that talks about ICT concepts, for whatever reason, never mentions this, because I'm sure that they don't know, right? Or they're just trying to intentionally not teach you everything. But this is highly important. And it's the reason that certain PD arrays get left open, right? It's part of the reason why certain order blocks don't even get really referred to in any real meaningful capacity. It's why things get left, because there's a breaker that's before it. This is why the breaker is amazing. It's one of the most important, because it's the very first thing that the algorithm seeks. I actually have this is something I made for my private group, but I'll share it with you. In a buy situation, if price is going higher to go lower, okay? So you framed out your range and this is your, overall premium discount measurement, spotting equilibrium. When price reaches back down in like towards equilibrium, again, you're thinking mitigation block, breaker, are those present? That's your first question. And if there is a fair value gap or an order block that's deep inside of this, your expectation is that it's not going to hit that. It's going to use the breaker, because you guys know that the breaker is a balanced price range. So that's another reason why it doesn't want to seek, or it leaves these PD arrays when it retraces down and you're looking to find a setup with whatever PD array you're looking at. Right? And many times the breaker on the 5-minute will look like an order block on like the 15-minute or the hourly chart, right? That's something you got to keep in mind as well. The higher time frame navigation from within PD arrays, right? I labeled this wrong, but you guys understand, right? This is sell scenarios. So if you got price declining and it's retracing up, and you have a breaker or a mitigation block, that maybe a bearish one, the price is trading into, but there's a fair value gap and a bearish order block above price, right? Above, inside that breaker. More often than not, it's going to leave those available, because the breaker holds precedence in the order in which the algorithm seeks PD arrays, right? So again, this is something that none of you guys have probably heard anyone talk about before. ICT doesn't come out and say it this obvious. He teaches it. You got to really dig for it, because he puts breadcrumbs here and there about this topic. But he'll talk about a topic, make like 20 videos, and then he'll talk about that same topic he talked about 20 videos ago, just to make sure that you were paying attention. And if you weren't paying attention, you miss it. That's why lazy students end up not getting much out of it. But I'm here, right, to try to bridge that gap, because I know it's hard. Even if you're not lazy, I know it's very hard. It was very hard for me. That's why, I paid other mentors that were well-versed in ICT concepts, so then they can kind of be a guiding light. I knew that I was on the right path, but I just needed that extra handheld experience, so the questions that I had could get answered, and I don't sit wondering, like, am I answering this question properly? It looks right, but there's always that doubt because of the way things are structured and the way ICT has released the concepts over the years. Nothing against him. It's not a knock against him. It's his stuff. And he knows that people rip him off. So he was like, you know what? Screw that. You're going to have to be working hard for it. Otherwise, you'll never learn. I'm going to make you work hard. Make it undeniably required that you got to go through every video to get answers to something that, you had a question about in the very first video you watched, right? You're gonna have to work for it. But I try to do my best to kind of bridge that, because I know it's hard. It was hard for me. I had people help me in the way that I offer help to others, and I have seen the fruits of it myself through my mentors, right? The ones that have traded or that I went to who've traded ICT concepts for, one's been trading for 11 years. And then you got ICT himself, Then I have a handful of other friends that also kind of help over the years. But now I'm here trying to, allow for mitigation of that difficulty. And those of you that have been with me for a while, especially those of you in my private group, you know that we do a pretty good job of bridging that gap. But hopefully that stuff made sense. Again, it's the reason why a lot of PD arrays get left open. And it's just the way it is. Okay. So again, I hope that everything has made sense so far. I think that there's really not much more I want to get into. It's pretty much my opinion on DXY currencies and the indices. I'm going to leave it to you guys to go do analysis on the bonds and yields. If you guys need any help with that, just let me know. But it's all the same. Everything's the same, right? There's really no difference. It's just a different package. Same contents, different package, right? The package is the asset. The contents is the analysis, the concepts that we use, and how we organize everything. All right. So yeah, before we go, do you guys have any questions? This is how the Sunday calls are going to be for the next 6 to 8 months, or 6 to 8 weeks. So, hopefully you guys are okay with waking up a little earlier. I'm up at 3 a.m., so it doesn't affect me, but hopefully it's not too hard for you guys. Because it's hitting back in this BPR. Mike, you're right about the BPR, by the way. So yeah, and again, if this low to that high is a breaker, and it is going to be a respected breaker, first of all, we shouldn't get beyond this, but we especially shouldn't get beyond the 50% from this low to that high. It should not do that. There's no real necessity for it to do so. So if it does, then we got to adjust. Okay, and we'll be ready to make that adjustment if necessary. But again, our main objective is to see how this is going to be treated. If it gets a opening that wicks above this high and then declines aggressively, especially if we close below the 50% of this potential bullish order block, that'll be 100% sure, or we'll be 100% sure that we will then be able to map this as a sell model and then kind of disregard the likelihood of any type of buy model unfolding. Right. So then if we do that and it confirms that by breaking the 50%, breaking this 50%, that's enough right there. If it gets beyond that, then we'll look to try to catch second stage distribution, targeting the previous week's low. We'll see if that unfolds. We'll see how DXY unfolds. We'll keep tabs on things throughout the rest of the week. Remember, we have NFP and CPI this week, and no news today or tomorrow. So low probability. If you must take an execution, I don't encourage you to. But if you do, you better lower your risk, because we're not in an environment that you need to be a gunslinging, insane person trading everything that moves, because it's not worth it. Price is going to trick you. It's going to be a little chaotic. But at the same time, the actions you take, it's going to either be a positive or a negative. And you don't want to do reckless things, because generally, even if you catch some positives, it'll still be overweighted in the negative category, because it just takes one moment for you to blow 3 to 6 months of progress, both mentally and financially, right? So yeah. With that being said, let me know if you guys have any questions. Appreciate y'all for hopping on. I know it was a little bit earlier, but thank you guys for hopping on and sticking with me. A little bit of a shorter call. but we did cover many bases, many things, and you probably learned something new when it comes to what I described about the PD arrays and the order in which they are seeked, and the fact that there is an order in which they are seeked. Maybe it'll kind of explain to you why you may have been missing certain setups and why certain PD arrays get left when there's a breaker. Okay. So yeah, if you guys have any questions, like I said, let me know. God bless you guys. Hopefully you have a good rest of your Sunday. And we'll be back live again here on YouTube on Tuesday next week. As always, we're always live Sundays and Tuesdays. So that's not going to change. And those of you in my private group, I will see you beautiful people bright and early tomorrow, as always. Okay? So yeah, with that being said, God bless y'all. And I hope y'all have a wonderful Sunday. And